This one is probably the home office deduction. So the home office deduction is one of the highest audit risk things you could do. Now, in the current environment we find ourselves, half the IRS has been laid off. Just yesterday, the DOJ budget for criminal enforcement on tax was cut. Your audit risk in general, right this second, is probably lower than it has been for your living memory. But in general, the home office deduction can only be done with a Schedule C business. So Schedule Cs by themselves are higher audit risk compared to other business types. And the home office stuff, it's the home office and the vehicle. Those two combined are what, the IRS highlights as the tax gap as far as the largest elements of abuse. And it's not that the strategies or that the deductions are illegitimate, it's that people abuse them, right? And because other people abuse them, that means you get put in the bucket of high risk. I would much rather take those same or similar types of expenses through an accountable plan, a Section 162 plan, rather than through home office deduction. And that means having a more professionalized business setup. There are pros and cons with that, but the pros are your audit risk is way lower. The cons are it is more complicated to administer. So there's that. But if you keep track of your numbers and you do the things you're supposed to be doing as a business owner anyways, then you get even more bang for your buck out of a 162 plan versus a home office deduction. So the thing with the home office deduction is that if you create a home office, there was a court case that established that your home office being your place of business means that your travel from your home office is business travel, assuming you have a business purpose. It's not a commute. That's the important distinction. Because your normal commute is not deductible. I remember I had one guy, this was back when I was working in Florida. He's a transplant from New York. So he comes in, he brings us his taxes, and this was back in the days when we could deduct unreimbursed employee expenses. So this is before 2017. And I was looking at his old tax returns because we always ask people to bring in their last three. And he's got $8,000 worth of tolls for unreimbursed business expenses. I said, "What is this?" And he says, "Oh, that was my bridge or tunnel tolls going into the city for New York." And I was like, "Yeah, but that's just what you did every day, right? That was going from home to work." He said, "That's what I paid to go to work. So it's a work expense." I was like, "No, you don't
Yeah.
get to do that if it's your normal commute, because the presumption is that you get to pick where you live. The fact that you happen to pick a place where you have to pay a toll to get to where you're working, that's on you, right? You could have lived somewhere else. And so your normal commute from home to work is not deductible. From home to work and then from work to home, not deductible. But by establishing the home office, now you have a place of work, and then going from that place of work to elsewhere is deductible as far as mileage or actual expenses, depending on how you want to do it. And so what happens is that people do crazy things with their vehicles and they'll write down, I was looking at somebody, they had 200,000 miles of mileage on a Schedule C, and it's just insane. And I've had clients that drive a lot. I had one guy that was liquor sales rep for the state of Florida, and he drove 46,000 miles every year because he had to crisscross the entire state like constantly, and he had to get a new car every 2 years. And that again, that was back in the days when we could use that for day jobs. That's about the max any one person can drive. The idea of driving hundreds of thousands of miles and you're not a truck driver is ridiculous. It's those abuses that dovetail on a Schedule C that's already abused because the people who file Schedule Cs don't have good advice because they're trying to do it themselves. All of that culminates into a very high risk tax position that you put yourself in. And that's what I would prefer people not do and do it in a better way, a safer way, to not put themselves in the bucket with those crazy people. So that's my least favorite thing that people ask about.
Thank you for answering the spicy question.